but more on the financing side and the things that we're doing to make sure there's capital available in this market. So just a reminder as you think about who to ask the questions to for what.
Thank you. Yeah, that's very helpful.
And Billy, I know you caught up with Julius this morning at 7:30. So I know you already caught up with him. But...
Yeah, well, we talked. I didn't actually answer my phone when he called me at 7:30.
Okay.
Brian and Hi, I'm Billy Nauman, a reporter with the Financial Times and producer of the Oral Money newsletter. I'm here today for a panel called Accelerating the U.S. Energy Transition via Technology and Infrastructure Investments. And joining me are four great panelists. First, we have Paul Siegel, the Chief Executive Officer of LS Power. We have Penny Roll, Partner and Chief Financial Officer of Ares Credit Group. Brian Savoy, Chief Commercial and Strategy Officer of Duke Energy. And Ravina Advani, Head of Energy, Natural Resources, and Renewables Coverage at BNP Paribas. And there's a lot to talk about here in a very short amount of time. The energy transition, moving to clean energy, is one of the most important challenges facing the world right now. There was a report out from the IEA very recently saying that if the world is going to hit the goals as set in the Paris Climate Accord, we need to stop exploring for new fossil fuels now. Time is up. And that doesn't come to as much surprise to anyone who's been paying attention to the science. But the fact that the IEA is saying it is really a watershed moment. That group has not been one to call for such drastic action in the past. But as it stands right now, renewables are not at a level where we can make the switch we can't flip the switch over to renewables right now. It's without massively disrupting economic activity and life as we know it in most areas. So that's the topic of this panel today, and how we can make that transition? What needs to happen with technology, with infrastructure, and how banks, private equity companies, and the energy companies are working together to try to pull in that direction. So I'd like to start first with Brian Savoy from Duke Energy. And Brian, I was wondering if you could tell us a little bit about what Duke is doing in this regard. Obviously, Duke has been investing in renewables, but a large portion of your business is still in natural gas. I remember it must have been 15 years ago, Boone Pickens called natural gas a bridge fuel, and it seems like that bridge is pretty long. But I was wondering, when are we going to make it to the other shore if we're on the bridge to renewables via natural gas? And how is Duke approaching that, and without disrupting, the power supply to people and the profits for your investors?
Well, thanks for that question, Billy. Good morning, good afternoon, wherever you might be on the globe. So Duke Energy serves about 8 million electric customers in the Southeast and Midwestern United States and 1.6 million natural gas customers. We're one of the largest energy companies in the United States. And our goal is to drive out our carbon emissions by 50% by 2030 and net zero by 2050. We have very clear goals in renewables to double our renewable footprint from 4 gigawatts to 8 gigawatts by 2025 and moving that to 24 gigawatts by 2030. And our belief is the net zero targets are only going to come closer. So these 2050 goals will likely come in as we need to decarbonize faster and smarter while we balance affordability and reliability for our customers. And that balance is what's crucially important. I'd say the first opportunity is customer behavior, right? The ability to automatically throttle appliances and air conditioners and heaters will naturally save energy. And the cheapest and the greenest electrons are the ones we never generate. So first and foremost, energy efficiency has to be optimized in our country. But even with that, we need a dispatchable fuel source so we can call upon that power when we have peak demand periods. And natural gas is playing that role today. We have a large nuclear footprint that's carbon free, and it's been safely operating for many decades. And we plan on keeping that nuclear footprint strong and viable. But natural gas serves as that bridge fuel, as you mentioned, Billy, that Boone Pickens coined a number of years ago. And how long that bridge fuel lasts really is dependent upon technology advances. Our customers demand reliability. You can go back to the Texas winter storm Uri this year, a case study on how reliability is so vital for everyone to live the life we expect and deserve. And so really balancing natural gas as that fuel that will be used less and less until a dispatchable zero carbon fuel is commercially viable.
Thank you very much for that. So Ravina, I'd like to come to you next. As we are talking about making that green fuel that's available on demand, commercially viable, there's going to be a lot of money needed to develop that technology that does not exist yet. BNP Paribas has done a lot in the world of green bonds, has done a lot in the world of sustainable lending. I was wondering if you could tell us a little bit more, and Penny, I'd like to get your thoughts on this as well, about the type of financing available, whether it's to companies like Duke that are trying to switch over to what they can now, or whether it's to companies that are developing new technologies that will help speed up that transition.
Sure. Thanks, Billy. I would say that like many other companies at BNP Paribas, we've been adapting our businesses, our investment criteria, our risk and sector policies to really stay relevant and sustainable in the long run. Most recently, we joined the Net Zero Banking Alliance, launched by the UNEP FI, as alongside 42 of the world's largest banks, to build a global zero emissions economy and deliver on the Paris Agreement. In addition to that, we've implemented policies for sectors with high ESG risks, for example, unconventional oil and gas. We continue also to retreat from carbon intensive sectors like upstream oil and gas and coal, for example. We're also starting to benchmark our loan portfolios against specific metrics to ensure alignment with the Paris Accord. We've committed to aggressive capital deployment targets in the renewable space, where by By the end of this year, we'd like to invest 18 billion euros. And lastly, as you rightly point out, we continue to innovate our financial product offering in sustainable finance to help incentivize our clients to transition and to transition rapidly, whether through green bonds or sustainable linked loans. That market has grown exponentially since its inception a decade ago. There are a myriad of products in the market, whether we're talking about green loans, green bonds, transition bonds, social bonds. And that's where we've really been a leader. In addition to that, we have been financing renewable assets from anything under the sun, wind to solar to battery storage to geothermal to fleet electrification. And as we look at some of these evolving technologies, we will move our risk appetite. We are looking to get smarter, more educated on some of the innovation regarding technologies. Hydrogen is an area that we're increasingly more excited about.
Thank you. Penny, I'd like to get your perspective as well on the type of financing that's available for the energy transition. Obviously, green bonds, you have to be pretty big to, issue a green bond. There's a pretty high minimum target there. And I think that, in the world of developing technology, there's going to be a lot of companies that are not able to participate in that market. What other options, from the private capital side are out there?
Hi, thank you, Billy. Yes, the energy transition needs a lot of capital to support it from a lot of different angles, clearly. There are extremely large projects, big companies that can access the markets that Ravina mentioned, but also there are a lot of more bespoke local projects that need support for building climate infrastructure. And in the energy transition space, with wind, solar, storage, hydro, these investment sectors have outpaced other sectors in the context of energy in value and the number of transactions. So if you look at the transaction value in climate infrastructure, there was over $100 billion done over the last 5 years, which is pretty significant. If you go back in time and look at where we were 5-6 years ago, wind and solar investments accounted for about 11% of the US capacity mix. 5 years later, it's about 17%. And by 2030, we expect wind, solar, energy storage technologies to account for about over 30% of the market. And that transition to renewables continues to take market share from conventional energy generation, which is great in support of the progress that we want to make toward clean energy. If you look at the factors driving the growth in renewable energies, yes, you have large companies, but you have smaller regional projects happening in these spaces, and they need the capital. There's been increased institutionalization of capital committed to these asset classes through, pension funds, other institutional investors who don't have access to these other markets directly. But there's a lot of capital because we all know the world is very focused on ESG. We want to make the transition happen. And to be able to do that, we have to commit the capital to do that. If you look at private capital fundraising, over the last 2 years alone, infrastructure funds in North America have raised over $50 billion a year. And that capital is available for equity, debt investments. The private markets are very good about being creative at how they finance projects. And over the last 5 years, the infrastructure funds, in North America have raised in aggregate about over $215 billion. So there is a lot of capital available and ready to be invested. And as the technology improves and the cost of building this infrastructure continues to decline, it makes these assets way more investable. And there's a lot of money ready to be put to work in the space.
Thank you. Thank you very much. Paul, I'll come to you next. I'd love to get your perspective on what sort of investment opportunities are out there in this area and sort of talk about a little bit about the investment returns. I think there's always, when you talk about ESG, for many years, there's always been the question of, is this, charity, is impact investing, concessionary capital, whatever you want to call it. Are people that are putting money into this doing it at a loss? I think in the case of green technology, that's not the case, especially, when it comes of all of the ESG categories. This is one where I think that there's a lot of money chasing a lot of potential opportunity here. I was wondering if you could tell us a little bit about what you are looking at from a returns perspective.
Sure. Maybe just to cover a couple of points that you raised there, Billy. One, our industry, generally speaking, doesn't love what we would characterize, what many of us would think about as truly new technology. It is rare that we make an investment in our sector that's less than $100 million. And I'm sure that that's the case in terms of the financing opportunities that are in front of the financiers in our space as well. We don't like binary outcomes when you're investing that much money for multiple decades of expected service. So what you'll find is that much of what's going on in the sector is commercializing technologies that have been available and putting them into the market for years, if not decades. The scope of the opportunity over the next few decades as we decarbonize is massive. We've seen studies that indicate over $4 trillion of investment needed in the United States, which is extraordinarily exciting. The biggest of those opportunities we continue to feel are likely to be in the storage and renewables space. We're focused in that area. We're focused in transmission. We're focused on electric vehicle charging as an infrastructure product, renewable natural gas, demand response, and microgrids, among other things that we're looking at, including prospects for finding ways to commercialize hydrogen, carbon capture. The opportunity set and the need for businesses that will allow us to decarbonize is extremely broad. Not to mention the fact that from where we sit, we do think we will need a firm, dispatchable resource for many decades to come. So we're also investing and continue to find opportunities in that space for flexible natural gas that we expect will run less and less hours as we move forward into the decarbonized future.
Great, thank you very much. Brian, I'd like to come back to you. The G7 meetings in Cornwall just wrapped up, and there's a lot of talk about, a green belt and road. There's a lot of talk about investing in energy transition infrastructure at a global level. Here in the U.S., and that's, this panel is focused on the U.S., we are still waiting to see what infrastructure package may make it through Capitol Hill. I'd like to get your thoughts on what government's role in all of this should be. We've talked a lot about private financing or financing from capital markets. What role do you think the government should be playing in speeding up the energy transition, and how is Duke working with if the Biden administration follows through on its plans to make the transition? It's going to be a massive change for you, right?
Absolutely, Bill. And policy is critical for the transition. Smart policy, right? The right incentives to invest in R&D for the new technologies that Paul was just talking about to make them commercially viable, as well as dealing with the stranded cost of existing assets, right? This is a large problem that as we accelerate retirements of assets before their end of life, there's balances there that we don't want customers to double pay for, right? And obviously investors don't want to carry that burden either. So it's a big challenge that work in the policy space, both at the federal level with the Biden administration and the legislature, as well as the states, because in the United States, the states have a lot of power over the energy companies. And so we're working at both levels. Actually, yesterday, North Carolina just issued a draft bill that would accelerate our energy transition and retire all of our coal by 2030. That's the type of policy we need to help move this faster down the pipe. And it will also require so much renewables that will help us achieve those double and triple goals I mentioned a few minutes earlier. So I would say policy is paramount to making all of this work, not only on existing assets and transition, but the technology advances that are required.
Thank you very much. Penny and Paul, I'd like to come back to you and talk more about private market investing, private investing in energy transition and in ESG more broadly. I'd like to get your thoughts on one of the things that we see a lot of worry about is when energy companies are incentivized to offload their, quote unquote, dirty assets, their coal or their gas or whatever it may be, that they are taken out of the private markets and they fall outside of sort of the disclosure regimes that are meant to monitor and measure this kind of stuff. I was wondering if in your work, Paul, I'll start with you. How are you getting the information you need from companies in your portfolio to make sure that you are able to keep up with the level of carbon that they are either taking out of the atmosphere or putting into the atmosphere? I want to talk about just disclosure and some of the challenges there, and I'd just love to get your perspective on that.
Sure. From a power plant perspective, Billy, it's fairly straightforward. We have to report our emissions on a very regular basis. And that information is broadly available, not just to an owner, but to virtually anyone who has the capability to search the databases out there. I would step back and kind of reiterate some of what Brian had to say on the policy front. I think what our industry really needs to decarbonize is a durable policy direction. We need our regulators and our politicians to agree on a path, set that path out, and there will be hundreds of companies that line up to try to figure out the best, lowest cost ways of accomplishing those objectives. And companies like ours will look to help meet those goals. So from a monitoring and understanding what's in the portfolio perspective, what's in the opportunity set perspective, that is really fairly straightforward. The key as we think about the future is what will the policies be? And one of the things that we certainly don't want to see is policy volatility, because we're not talking about 2-year investments here. These are very long duration assets. So we need to be smart about how we achieve the objectives. I think certainly in the United States, it feels like we are on a particular path, and the trajectory to that end point is probably the biggest question, and probably the biggest challenge.
Great. Penny and Ravina, I'd like to come to you guys next. We've got about 5 minutes left, so this may be the last question, but we'll see what we do here. I wanted to talk about one of the things that Paul had said earlier about $4 trillion needed in financing. Sticking with the policy theme, what would you like to see? What do governments need to do to help bring that money into the market in this direction? That was another point of discussion at the G7, was not just public spending, but emphasizing bringing in private capital as well. From your perspective, and I'd like to hear from both of you on this, what has been done so far to incentivize that, and what would you like to see happen more to get more money from the capital markets into the energy transition? Penny, would you like to go first?
Sure. Thanks, Billy. Yeah, I mean, if you look at capital available, I think I would look at it from two fronts. One is we are investing in climate infrastructure projects. We are a skilled investor in this space, but we also bring to the table the understanding of the needs and look at it across our broader portfolio. Ares has invested in thousands of companies through our private equity and credit products, and ESG isn't something on the top of our mind across the whole portfolio. And we can bring that expertise and understanding to companies across our portfolio to help them move toward a zero carbon standard. We know this is an evolution. We know that it will take time to move from old technologies to new technologies, but we're seeing it more and more all the time through our portfolio of companies wanting to move in the right direction to adopt clean energy and to be able to work collectively to be able to achieve the standards that will be set forth through government standards, et cetera, that we're seeing both in Europe and moving forward into the US. Stability is important for our companies, but the ability to share information and resources on how to adopt these standards and transition into them will be valuable not only for our climate infrastructure investing to enable the technologies, but for other companies who don't have expertise in that space to be able to adopt and manage toward those standards.
And I would add, Billy, you know, the IEA report that you referenced, it highlights that almost 50% of the emission reductions needed in 2050 in a net zero economy depend on technologies that are not yet available. So to reiterate what all of my esteemed panelists are talking about, policy is going to be a key component to that path to net zero. We've been seeing governments across the globe play an increasingly important role. Looking at the US, we've seen a revival of efforts to combat climate change with a recommitment to the Paris Accord and extension of tax credits. We've seen the US most recently put out an offshore federal target of 30 gigawatts by 2030. We've seen the government also put forward ambitions to streamline that permitting process. There are state mandates referred to as renewable portfolio standards. There's loan guarantees, there's grant programs, R&D spending programs that will all spur investment in new technologies. You know, in terms of what else can be done, you know, there's been talk in the US about a national RPS, renewable portfolio standard, which is something that could be hard to accomplish. And there's also been a lot of talk on a carbon tax to really get to the heart of the problem, emissions. That's a little bit harder to implement. It could be faced with a lot of resistance just because of jobs around the shale industry. But I think that the government, you know, will continue to play an increasingly important role. And in the US, we are seeing pretty big strides, certainly with the current administration. So very excited about what's to come, but it is a necessity to really achieve that net zero path that we're all looking to accomplish.
Well, thank you all so much. We are up against our time limit. There's so much more I'd like to talk about if we had more time. You brought up carbon taxes. I feel like we could spend a whole another panel just talking about the ways that those may be implemented or what may be needed there. And Brian had brought up nuclear earlier, and I'd love to talk more about that because I think that is often, it's controversial in many circles, but often overlooked as a potential solution. And I just love to debate that if we had more time, but we don't. So with that, we will wrap it up here. And thank you again to all of our panelists. Thank you to Vivatech. Thank you, Ravina, for bringing us all together. And yeah, on with the rest of the show. Thank you very much.
Thanks, Billy.